Greetings traders, my name is Timothy Hellberg. I'm a professional trader since 12 years back, and today I'm bringing you a market report for week number 17 of 2022 in collaboration with IMGFX, the people's broker. So let's jump right into it. It's probably not your first time watching this, but if it is, let me run through quickly the table of contents for today. We'll go through the economical calendar, looking at the events for the upcoming week. We will go through market sentiment, the current one, and the potential shifts to look for. We'll go through last week's calls, where we'll talk about why a risk to reward ratio matters. We'll also talk about Bitcoin that is closing in on support. We'll talk a little bit about gold, where longs are not yet going, but there is something shining in the chart. We'll also talk about dollar Mexican, where we have the potential for a 2-year trade for you guys who really like them long-term trades. We'll take a look at NZDUSD, so the Kiwi, understanding fair value and what it means. And we'll also talk a little bit about Australian dollar against the New Zealand dollar, where we are looking for a deeper pullback to go long. So, before we jump into that, guys, if you want to pause the screen and read the disclaimer, you can do that. As always, this is not a general recommendation to buy or sell anything. It's just me with my knowledge going through the market, what I'm looking for, and you can use that information however you want to. In the end, it's always better doing your own research, understanding the markets by yourself. You should never trade in a manner where you're only basing your trades on what someone else has said. But hopefully with my run through of today, you can tackle the upcoming week a little bit better with a little bit more green numbers. That is my aim for this. So yeah, let's jump into the economical calendar. Looking at Forex Factory, that has a great economical calendar. We have the French elections that are coming in tonight. Now, I mentioned these in a report a couple of weeks back, that they could become a problem. Back then it was much tighter between Macron and Le Pen, but the way that this has moved due to news, etc., about Le Pen, the gap has widened, so I'm not too worried about this. However, if we get something unforeseen here, then yes, and unforeseen in a way where Le Pen would look to grab victory, that would be very euro negative, and we would see that we could see some opening risk during late Sunday night when the markets start opening over in Asia Pacific. Looking on Monday, not much is going on. Looking on Tuesday, not much is going on. Looking on Wednesday, we have some good inflation readings for the Australian dollar, and you've heard me bang on about this for weeks now. It's all about inflation in the world, so CPI is interesting, especially for the Australian dollar, and especially if you're going to keep a watch list with the currency pairs that I'm going to go through today, as the Australian dollar is mentioned and has exposure in at least one of them, but they are tightly correlated to the New Zealand dollar too. Then we have Thursday, not much going on. Advanced GDP quarter on quarter can be interesting. All of these, this 14:30 European time release for the United States can be interesting. It's worth keeping an eye on from the inflation point of view. And then we round off the week with not much going on. I would not expect the core PC price index to move the markets too much at the end of the week, unless we have a huge deviation, and it's always like that, you know, with these kind of data releases. Huge deviations from the expected figure will upset the markets. So with that said, let's jump into the sentiment. So as you guys know, when we look at the sentiment, we like to take a look at the VIX index. And what have we seen in the VIX index? We have seen a spike in volatility. The market is getting a little bit more jittery. And why is that? Well, obviously, we are starting to get some concerns about the Russia-Ukraine crisis, mainly because this is dragging out in time, and the market wasn't really expecting that, and it seems like Russia might have a completely different approach to this than what we were initially expecting. So that is bringing some doubt or some risk off into the market, increasing volatility. We are kicking off earnings seasons in the United States, where for example, you've all probably heard about Netflix, where we had a huge miss, or not a huge miss, but a huge dump in the stock price due to them changing their business model. So we are seeing a little bit of nervousness creeping into the market. We have the big issue with inflation, we have geopolitical risk, and we are getting this good country, bad country discrepancy between probably the two largest economies in the world, which is the United States and China, where China is cutting rates and the United States are hiking rates. So that is putting some pressure on the dollar-yuan exchange rate, which is never good for risk sentiment. So if we, for example, take a look at, as you can see now, the dollar against the Chinese yuan on the daily chart, you see the dollar has just been going rampant against the Chinese yuan. This is an issue. We have the big level of 6.6. So if we make it all the way up here, this becomes a problem for the markets. Last time we got this, the market wasn't really looking as it is now, but you're seeing this rally coinciding with, if we go into the S&P 500, the largest 500 stock companies in the United States, largest stocks in the United States, you're seeing the same push down in stocks. So I'm not going to spend too much time on this, but this can become a problem for the market, and this is why you're seeing risk off starting to creep in a little bit in the markets. So keep an eye out on that dollar against the Chinese yuan exchange rate, because it can become a problem if we keep pushing higher up to the 6.6 level. Okay, so next up, we are going to run through last week's calls. So last week's calls, we had pound Aussie, which was generally more as a Japan Aussie was generally more of a hedging trade, a seasonal trade, where we were looking for the strong seasonal statistical bias for pound to rally in April. We're heading into the end of April, and we have seen a good rally from the bottoms in pound, but you should really have bought down here in the beginning of the month. Instead, we waited for this head and shoulder pattern, and then we entered a bit late, and unfortunately it just took out our trade, or my trade with the stop loss that I had, just took it out until moving back into positive territory. So this trade could still be on, especially with how the Australian dollar has been moving lately, especially as we'll talk about the Australian dollar against New Zealand dollar later on. We are looking for a pullback in the Aussie, so which would promote a higher exchange rate for pound Aussie. I'm out of the trade. I'm not going to chase it. Why am I not going to chase it? Well, because we had another trade, which was the Euro NZD, where we had a good risk reward. So we lost 1-to-1 on pound Aussie, and in Euro NZD we had a 2-to-1 risk reward ratio when we closed the trade. So we made more money on this trade than we lost on pound Aussie. I'm going to put a chart up here. So this is what the trades looked like in the beginning of the week. So you could easily have made huge profits on all of them in the beginning of the week, especially looking at gold too. because we had a good rally in gold in the beginning of the week, as you can see. So you could easily close the trades in the beginning / middle of the week with profits on all trades. I didn't do that. I'm holding gold for a longer time frame, and now gold is a little bit negative again. And then pound Aussie moved down and you got stopped. So that really comes down to how you manage your portfolio. For me, I wanted to hold gold longer. I want my trades to be out. If the stop loss gets hit, the stop loss is there for a reason. So I hold on to my trades, and this is what it looks like at the end of the week. As you can see, made more money on Euro NZD than I lost on pound Aussie, which is perfect, and that is why you need to have a good risk-reward ratio on your trade, where you risk less with the potential to earn more. Otherwise, you will have to have a high hit rate to make money. And at the same time, still holding gold, which is a little bit underwater right now. So that was last week's calls. Hope you guys got into some good trades too. So let's look at this week. Bitcoin against the US dollar. So we are coming down to the lower parts of this big pattern that we've spoken about before. So this is interesting down here. As I said before, going long against the support is very interesting in BTC. However, a word of a warning, my preferred scenario is to long against these supports to ride the rally up to the upper channel. However, if we break out of this structure, if we break out of this bigger structure, you could easily see a run against these lows down here, and potentially even lower. So it will really be the effect of someone just, pulling out the rug from underneath Bitcoin. Bitcoin reacts violently to those kind of structure breaks. So, going long down here, I would keep my risk in check, so to say, because this thing can really take off and fall off a cliff if we break lower. So just a word of a caution. Gold, as I said, still holding my long position. We broke out of the consolidation, made some good returns, almost all the way up to 2000, as I was predicting in last week's report. However, I did not close my trade. I thought that it was going higher. I saw a case for it going higher, and now we're back into the consolidation again. So I would expect this to move around a little bit in the consolidation. And as mentioned, for weeks on now, if we break out of this consolidation structure and out of this lower support, and we close below both of these levels with conviction, I'm out of my long bias for now, and I will have to redefine my long-term bias for this currency pair. Okay, dollar Mexican. So bit of a weird one, an exotic. So keep an eye out on the spreads, keep an eye out on liquidity on this one. But why am I highlighting this trade? Well, as I've spoken about before, I think although short term we can see some pullback in the US dollar, I like the US dollar at this point in time. Now, if we look at this chart, look at this huge chart. If we scroll out on dollar Mexican, you have this huge rally. Why? Well, dollar Mexican was the easiest currency pair to trade in the world when we had Donald Trump. Why? Because Donald Trump was very hard against the Mexican border. He built a wall. He was very tough on immigrants coming from Mexico, etc. It was a clear-cut good country, bad country trade. I'm not saying Mexico is a bad country. I'm saying that from a macro point of view of how you're going to structure your currency pair when trading. So what I want to look for is I want to ride this type of move that we have right here in dollar Mexican again. So preferably I want to get in the beginnings of these moves. Now, there is less than 2 years left until the next presidential election in the United States in 2024. Donald Trump is rumored or likely to run. So I wouldn't be completely... that combined with how I like the US dollar at the moment, and how hard Mexico got hit by, for example, COVID and the political issues that they have, so to say, in the country, I wouldn't mind starting to build up longs against this down support right here. I think this could be interesting, and starting to build a large position of several trades, looking to add longs, looking for this to get, you know, this kind of explosive move into 2024. Will we get it? Who knows? But I think there are some telltale signs that this could be the beginning of the next bull run. However, important to mention is that dollar Mexican is a bit sensitive to risk, so depending on what happens in the world with geopolitical risk, you know, inflation coming back after the pandemic, all of that could throw a wrench into this. But I think it's a bit of a different setup for you guys. Looking at NZDUSD, we have something we call fair value. So I'm going to touch on this very briefly. Fair value is when you have a currency pair that is considered a commodity currency pair. So a commodity currency pair is a currency pair that is very tied into the price of certain commodities. For example, the Canadian dollar is very tied into the price of oil. The Norwegian crown is very tied into the price of oil, etc., etc. Australia and New Zealand are both huge exporters of goods. Now, that means that the price of the currency will always be very tied to the value of a commodity, and therefore you will get these large consolidations. This is what is called fair value, because the market wants to be able to price the value of the commodities that the country is exporting. The market doesn't like this kind of price action that we are seeing here, because it gets so hard to value the commodities. That's why we very often get these kind of patterns in commodity currencies. So, with that said, I think that if we scroll out this chart, as you can see, we have a fair value area there, we have a fair value area there, and we have a fair value area there, etc. We have come out of a fair value area up here. So with that said, I think this pair is looking to make a new fair value area, and I think it's going to respect this previous one. So I wouldn't be complete. I would watch how price reacts against the lower bounds here. You don't want to try and catch a falling knife. But if we start seeing some conviction where it's starting to form this consolidation pattern here, I think there is a strong case for this to start forming this type of consolidation pattern here, and this can go on for a couple of months. And then you can trade that. It's very easy to trade those kind of consolidation channels in a pair like New Zealand dollar against the US dollar. So this is something that I have on my watch list. It's not really a clear-cut setup, but it's something I want to see how it reacts against these lower regions, and if we start forming this kind of consolidation pattern again, and then I'm going to trade that consolidation pattern. That brings us on to Australian dollar against the New Zealand dollar, where we are looking for a deeper pullback to go long. Once again, you can see Australian dollar against New Zealand dollar is the snooze pair of the world, where everything is tied to commodities, so it's really not moving much at all. However, Australia seems to be a little bit ahead of the New Zealand Central Bank in terms of accommodating policy to the ongoing inflation issue. So, with that said, although the Australian dollar has pulled back a little bit due to the Chinese cutting rates, I wouldn't mind seeing this pair heading down into this region down here before taking off again. So, looking at this this trend line here, any type of pullback into this trend line, I think could be very interesting to go long off. So I don't really have a trade setup this week where we have something to get going directly, unless the market moves a lot in the beginning of the week. But we have a lot to add to the watch list. So That's it for this time, guys. I hope you liked it. If you did, leave a comment, leave a like. If you want me to go through something special in next week's update, leave that in the comments. I will take a look at it. I will talk about it. Hope you guys have a green and profitable week. Stay safe, guys. Bye bye.